Hey guys, it's Nikki. Life update, we're buying a house. It wasn't totally planned. We've kind of been soft Zillow stalking really since we bought our current house, and we found a really unique property that we just couldn't not jump on, especially since we've got the money to move around for a down payment and everything. Now, part of the reason why we decided to jump on this opportunity was because of the option to do something called a 2-1 buy down on the mortgage. And I wanted to explain that to you guys in case it's helpful for those of you guys that might be looking to buy something right now as well. So first of all, what the heck is a 2-1 buy down? It is a program available through your mortgage company that will allow you to temporarily buy down the mortgage rate on your loan. So let's say hypothetically, you're getting a house right now for a 7% mortgage rate, which like goodness, after 2020, that like hurts my soul. But anyway, so 7% mortgage permanently. But so year one, your interest rate would actually only be 5%. And the second year, it would be 6%. And that's gonna save you a good bit of money per month. Now the trick here is that it's something that the seller has to pay for. So the seller would have to contribute some closing costs to your deal that would cover those interest payments. They're essentially prepaying the interest, and that's why it nets out for you as a lower rate for those first 2 years, if that makes sense. Now, there's a reason why this hasn't been available in a couple years, and that's because it's something that you have to negotiate into your deal with the seller. And what seller was going to give up anything in 2020? If there's 18 offers on your house, then why would you as a seller give the buyer any wiggle room on that? But now that the market has softened, it's something that people are more open to. So one thing I want to note is that it really only makes sense to do this if you expect for the mortgage rates in general to drop overall in the next couple of years so that you can refinance. So as an example, because mortgage rates are at a 10-year high, we are hoping, that the rate will drop. The reason why you would want rates to drop is because if they're not expected to go down, then long-term it would be better to pay points towards lowering your long-term interest rate rather than doing a short-term drop on the interest rate, if that makes sense. So like if you're negotiating that your seller pay $10,000 in closing costs, you could put that towards a significant break on your long-term mortgage rate rather than doing this prepaid amount for just those first 2 years. So for us, I think it makes sense even if the long-term interest rate doesn't go down. The reason why is we don't plan to sell the townhouse that I'm currently sitting in. We want to keep it as a rental and hopefully generate a good amount of income because our mortgage is really low on this house compared to what it would cost now to have this mortgage just because the interest rates are so different. We can maintain the mortgages on both houses. We just won't be able to do as much investing or other things that we want to do. But by having the lower mortgage monthly payment the first 2 years, we can build up a lot more savings for repairs for this place if anything goes wrong. If we get like a crazy tenant and have to, do damage repairs or anything like that, we'll be able to manage that a lot easier than if we were paying that full mortgage all the time. And then we also want to keep pouring that money into the market because if there's truly a recession coming, even if there's not, just because the market is so far down right now, this is a good time to invest because the market will eventually come up. We don't know if it'll take 6 months or a couple years, but regardless, it should come back based on all of the data for like hundreds and hundreds of years. I say it all the time, millionaires are made during recessions. I want to be investing right now. I actually think it's a terrible time to buy a house for that reason, but it's not going to stop me from jumping on a house that I truly believe is the right property for us for the medium to long term. So there are two really important downsides to consider with a 2-1 buy down. So the first, which I kind of mentioned earlier, is the seller has to be incentivized to accept this because it's only something that the seller can pay for. You cannot have anyone else pay for it as like a gift, or you can't pay for it on your own. Now, in order for our sellers to accept this within our offer, we inflated our actual sale price to cover the amount in closing. So just in terms of hypothetical numbers, if you were buying a house that was $500,000 and in order to get a 2-1 buy down, the seller had to pay $10,000 in closing costs, we in this case would have offered $510 instead of $500. and have the overall sale price for the seller net out to be $500. That way they're not losing any money on their bottom line, but we get our closing costs. But that does mean your mortgage is a little bit higher. So just wanted to throw that out there. That's the approach that we took. You also may have to give in other areas for your negotiation. So our sellers had competing offers that were very similar sale price to us, but obviously the commitment to closing costs was something that they were concerned about. And we had a little bit of a unique situation that I won't get into, but they actually ended up asking us to waive our appraisal contingency, which we were initially very against because we needed the financing in order to buy this house. But we got a little bit creative, and this is where your agent and your mortgage lender should be able to work with you during the buying process for situations like this. They suggested that we waive the appraisal contingency, but rush the appraisal and get it during our due diligence period so that if we needed to walk away, we could do it during due diligence because of the appraisal, if that makes sense. So it made our overall offer cleaner, but it still gave us the same amount of options. It just was a condensed time period and stressed us out. But besides the gray hairs that I'll get from it all worked out okay. So you might have to get creative if you are asking for a 2-1 buy down, but I do think that long-term for us, it'll be worth it. I would love to hear in the comments if you've ever used a 2-1 buy down or some other similar program, because it is new for me. And I'll be honest, it was the first time my agent had ever done a 2-1 buy down. So, it's relatively new in the market. Even though I don't think it's a brand new concept, I think it's pretty new in recent times for a lot of people. And I wanted to make sure that if you're looking at a house, you're educated on what it is and how to use it. So I hope this helps. If it does, please like and subscribe. It really helps my videos reach more people, and I will see you next time.